Hello and welcome to the John Ark Show. Today's episode is called Micro Mortgages. Before we begin, I want to encourage you to subscribe to our channel for free. You can also like, comment, and follow us. We're going to have a lot of great celebrity interviews coming up, so make sure to click on that notification bell so you can be notified every time we upload a new show. Also, we ask that you post a link to today's episode on all your social media to help spread the word. Now, let's get started. Remember how the crash of 2008 was caused by loans and mortgages which required no income verification or tax documents? Well, they're doing it again. Just as the real estate market is seeing home prices start to drop and buyers pulling back because of that, the lenders are now looking for more options. Lenders are getting more concerned about people not being able to qualify for normal or conventional loans, so they are expanding the loan programs to include more non-conforming loans. These are loan programs for people who can't qualify for other types of loans because of their income or credit score or ability to produce tax records. Historically, people in this category have been forced to accept higher interest rates and harsher loan terms. Ultimately, these loans crashed the real estate and the mortgage market in 2008. Now, the geniuses are doing it again. Only this time, they're taking things further. Our sources are telling us that because some lenders are getting desperate, because fewer people are applying for mortgages, they are now actively considering new types of loans and mortgages. Very, very unconventional types of mortgages. Now, these have not been officially implemented yet, and they're not available on the market yet, but they are being considered and discussed. One type of new loan they're thinking about is the micro mortgage. Wait till you hear this. What's a micro mortgage, you ask? This is a new mortgage concept. It's not out yet. It's just a concept for a loan that's only 1 to 2 years in length. It can be set to auto-renew each year or auto-terminate each year depending on the terms agreed to by the bank and the applicants. What would the benefits or disadvantages of such short micro mortgages be? First of all, it would allow the homeowner to benefit from whatever price appreciation the home has realized in the last 12 to 24 months that this micro mortgage was in place. So the homeowners would benefit from gaining the increased equity in the home. But if the price falls, then what does the homeowner have to cover the shortfall? Well, upon termination of the mortgage, a rental clause would kick in, giving the homeowner up to 6 months to sell the house before they have to vacate it. Or they can agree to new rental terms on a 12-month basis. We haven't been seeing anything official, but the rumors we've been hearing make these new loans look like an effort to burden the people who get these micro mortgages with all the problems caused by what we believe will be the coming collapse of the real estate market. I see absolutely no advantages to these so-called micro mortgage concepts, and quite frankly, I don't think they will ever come to fruition or be brought to market. I think that the people would be better off just renting a place while the real estate market implodes. I can't imagine why anybody would want to go through all the headaches of all of this. I think it would be much better to let someone else catch the falling knife of the real estate market than it would be to get involved in some new, highly dubious micro mortgage concepts. I suspect the reason they haven't been brought to market yet is because it's an ill-conceived concept. I don't believe that many people would find value in micro mortgages, and they probably won't embrace this option. Another new form of mortgage that they're contemplating or thinking about is the equity mortgage. This is a 30-year mortgage in which you can take the value of any price appreciation that your home benefits from over the last 12 months and suck that money out, suck that equity out, and apply it towards future mortgage payments. So let's assume that your home goes up in value on year one by 10%. The equity mortgage would allow you to automatically take that 10% out and apply it towards your current or future mortgage payments. The bad news is that if you continue to do so, you would never really realize any benefits or added appreciation in your home because all that money was just sucked out and used for more mortgage payments. These sound like interesting ideas, but what happens when the real estate prices start collapsing, which a lot of people believe they will? Because of that, we don't believe that the equity mortgages will ever be brought to market either. All these concepts that we're hearing about just seem like a way to shift the burden of future losses or current losses to the home buyers and to help the lenders reduce their risks. I think there's no doubt that we need more innovation in the mortgage business, but it has to be more balanced and helpful to the buyer. It just can't be one-sided, and rendering nothing but assistance and risk mitigation to the lenders. That's not going to work. People will see through that. It can't just be a creepy risk shift or transfer to the home buyers that they disguise or try to package as something as helpful to the consumer. I don't think that'll work, and because of that, I don't think these things will ever make it to the market. Thank you for watching. I want to encourage you to subscribe to our channel for free. You can also like, comment, and follow us. We're going to have a lot of great celebrity interviews coming up, so make sure to click on the notification bell so you can be notified every time we upload a new episode. Also, we ask that you post a link to today's show on all your social media to help spread the word. Thank you, and we shall talk to you soon. Bye-bye.